smart to be broke. I'm too smart to be broke. I'm too smart to be broke. Where's the money? I'm too smart to be broke. I'm too smart to be broke. I'm too smart to be broke. Where's the money?
Yo, yo, yo. Greetings, family. What's going on? What's going on? Thank you for you all that are tuning in at this moment. We're going to give it a few minutes for people to come on in. And in the meanwhile, if you here, you know what I mean, make sure to drop down in the comments and let me get your name and where you from so I can know you in here. You know what I'm saying? And if y'all appreciate the information, you know, feel free to share, like, and subscribe. If you're new to this channel, I do talk a lot about finances in the realm of getting your business started, business credit, and things of that nature. So I'm really big on, you know, making money online, generational wealth, and just sharing my insight. You know, I'm not a financial advisor or anything like that before we get started. Can y'all hear me good? Let me double check real quick. Okay, yeah, sound like I'm good to go. And somebody had asked me last night on my previous live about how to get funding or how to fund a fix and flip. So we're going to dive into that topic. You know, for those who've been with me for a while, you might have seen me mention some things about real estate. And I was, active out here in the San Antonio, Texas market as far as, doing some lightweight fix and flips, doing some wholesaling. I was I'm still licensed. I'm just not active at the moment. So I can share a little bit of insight with you from my experience, you know. And with that being said, family, I'm just gonna get right into it. So when it comes to, I know particularly this viewer was talking about fixing and flipping. When it comes to real estate, there's so many different avenues and ways to get into a property. So one being the fix and flip, which may be what you see on places like HGTV and different things like that. So when it comes to being able to fund a deal that you're looking to get a return on, say you're looking to fix and flip a property and get out of it, you know, we'll say in under 6 months, 3 or 4 months, the most traditional way, I would say is, you got to have good personal credit. If you're going to the bank, trying to get money for a property, and just pull, get some money off a property based off your personal credit score. Now, however, what you'll run into a lot of times is when you're looking at a property, maybe the property isn't up to par, won't pass the bank's inspections, and so on and so forth. Now, they have other type of loans and stuff like that, but for the most part, when you're trying to get a traditional loan from the bank, and the property isn't, it's not in good condition, then it's hard to get money for it. So what can you do to, do that flip? Say if you got good personal credit, you may be able to get $20,000, $30,000, $40,000 off a line of credit, or you can do that from your business as well if you have your business set up properly. But what I'm going to talk about is for people, and I'm going to touch on the credit side, but for people who don't have any money, it's going to come down to relationships, and it's going to come down to actually finding a property. I forgot where I heard this term from, which is find the money, find the deal, or find the deal, find the money, whichever way. But I pretty much, can say from my experience, once you find a property at a very good price, the money will come. Matter of fact, let me just give you some insight. All right. So when it comes to getting a property, say with no money at all, I started out wholesaling real estate. And for those of you all who are not familiar with wholesaling real estate is, how I put this in layman terms for you. Okay. You may be familiar with the term wholesale. And initially, when you're wholesaling something from a company, business, whatever business standpoint, all right, you're getting something in bulk, but more importantly, you're getting something at a discounted rate. Now, when you get this item or this product at a discounted rate, you're able to sell it for more, usually because you've bought so many of them. But when it comes to real estate, it's not necessarily about buying real estate in bulk. It can be, you can get discounts sometimes if you're doing package deals. But simply you're finding property that's discounted. Okay. And how you find properties that are discounted would simply be houses that are, if you're driving through neighborhoods, it's called driving for dollars. You're driving through neighborhoods and you're looking for properties that are looking abandoned. They have tall grass. Maybe the maintenance isn't up. Just something that stands out that makes the house may look vacant or abandoned. All right. Now, when you're looking at these deals, all right, these leads are potentially deals because the owner, they could be motivated. That's what we're looking for from that aspect. So motivated sellers. And what happens is, say for instance, somebody's grandma passed away, grandfather passed away. They don't know what to do with the house. Times like this that's going on, people are behind on payments. So it's so many different reasons that people may just want to get rid of the house because they don't have the money to fix it. It may be a headache to them, and they don't want to go through the motions with it. Okay. And they just want to be done with it, and they want to be done with it fast, typically. All right. Cause if you ever know anything about selling a house, the traditional way, it could take you 3 months, 4 months or something like that, depending on, the flow of things, or looking for a house, trying to find somebody. It take a while. So, when you find this particular, say somebody, I've had a deal with somebody has passed away. And so say somebody passed away and the heirs just wanted to get rid of the deal. The house may be worth, we'll just do even numbers. Well, the house may be worth $100,000 when it's fixed up. Okay. But they know that the house is tore up. It's tore up. All right. It's tore up. Say the house is paid for, but it's just completely tore up. And in its best condition, it's worth $100,000. Where you go and you assess that, hey man, this property need at least $40,000 worth of work. Okay. So now, all right, if it's going to be worth $100,000 when it's fixed up and it needs $40,000, you got to do the math, right? So you say, 9087. So you say, okay, $60,000 allows me to have the difference. So you say, okay, but I'm not making any profit on it. So you want to make $10,000. Okay. And say, that whoever, on the other end, want to make some more money. Right. So say for instance, okay, all right, you get the property contracted for $20,000. That if somebody puts $40,000 in it, that's $60,000. So now after you contracted it for 20, long story long, all right, you're going to assign the contract to somebody else, maybe for 30,000. That way you can get the 10, they could put the 40 into it, and they can still make their profit on the back end. Now, this concept is simple in theory, but it's going to normally take some consistency. And as far as, really finding those leads, I'm not going to break that down. I could do another video on that. If y'all want me to dive deeper on the wholesaling aspect of it. And that's one way to get started that I got started. And I typically have done deals with little to no money, but a lot of effort, a lot of footwork, a lot of cold calling, a lot of knocking on doors, a lot of things like that. Okay. Now, after I began to make some more relationships, another way I've got some financing is this. I found one of those properties through my means of looking and finding distressed properties. Actually, this deal came from a bandit sign, one of those signs that say we buy ugly houses, so on and so forth. The lady just wanted to get out of the house. Okay. The house was worth about $155,000. She said she just wanted like $20,000 or so to walk away with. I contracted the property at like $65,000. The property is worth at least $155,000 in its best condition. It needed about $30,000 worth of work. All right. I thought it might be 20 at the time, but the foundation had some issues that wasn't guaranteed under the warranty. So now that I got that deal at such a discounted rate, I had a private lender. All right. So that's something I kind of skipped over, but I'll talk about that a little bit more. I had a private lender, and what that means is it's money. All right, you know, you got hard money, you got private money. Private money is usually just somebody you have a relationship with. They may not be advertising themselves as lenders. You know, for some reason you come across these people and they have money behind them to invest in things. All right, and a lot of times they're looking for people who find the good deals. And so with this particular deal, I didn't pay any money out of pocket for this particular deal. All right. So I contracted it at $65,000. And I think me and my partner, we ended up selling it for around $90,000 or something like that. And what happened was the lender lent me the money. My LLC closed on the property. And he did hit me over the head with interest for about 11 to 12% interest or like that, something like that. But I didn't have to make any payments on that for 90 days. I think it was a couple of points. I know I might be talking over some of y'all here, but when y'all start getting into real estate, you understand what I'm saying. So with that being said, we sold the house before those 90 days. The only thing I did was pay about $500 to get the grass cut for people to clean out the house. And the reason I didn't have to pay any money for that deal out of pocket, because it was such a great deal. Now, every deal is not going to be the same. So when it comes to financing, that was just built off a relationship. Somebody I knew introduced me to them, and I just happened to find a good property, reached out to them to do business with them, because I could have easily wholesaled that deal. At the time, you know, I was an agent. I could have listed that deal. I could have even kept that deal. But that particular move at the time, I decided, me and my partner decided to just do the deal like that to build a relationship with the lender. So that just goes to show you that I didn't have any money. So when people talk about private money and hard money and people being sharks, well, you know, you just have to know your numbers. And if everything makes sense, then you can go do deals with these people. Now, outside of private money, hard money loans that are usually used to get fix and flip, you can get used business credit. OK. And a lot of times particular loans may be 10% down or 20% down. All right. To get into a property. All right. And in that case, you might have that 10 or 20% to put down on a loan. They even when you're dealing with private money and other type of builder loans, sometimes you have to put a percentage down, and depending on your progress, you know, they'll give you draws to, to make sure you're on task and you're on time with putting your rehab together, to go ahead and give you funding as well. So I just wanted to throw that out there, because I've done deal with private money, hard money people, and it's turned out beneficial. But you just have to build good relationships with people. Now, there may be people who I don't know about how now, but typically people with 401ks, savings, people that don't know what to do with their money. All right, those are private relationships. Hard money lenders are known typically publicly. Okay, and now the main thing, of course, I have to talk about on this channel is business credit. So, say for instance, you're getting a loan and a property as a business to build. All right. And say you use that business credit to build that property. You just have to be able to pick the right neighborhood, get the right the builders, and find the right situation and opportunity, and be able to sell that property. All right. So you can profit and pay that credit balance back off. You know what I mean? So when it comes to getting business credit, I talk about that a lot. I got a course that talks about that. But essentially, if you have a line of credit, it's easier to get business funding, as well as if you get credit cards that have balance transfers. So you'll be able to take balance transfers and, write a check to your actually business checking account so you can use it that way. So those are some of the methods, that I've used personally, that I've seen to get funding for your fix and flip. One is if you don't have any money, you're going to have to build relationships. You might have to bird dog. You might have to go out and find properties. So even when people are looking to get started as a wholesaler, essentially, even if you are looking for the property, the main thing is getting the lead, converting the lead. And if the deal is really great, you can close on that particular property. Now, most of the time, the people will want to know that you have experience with doing flips, so they don't want to just lend you the money and then you don't have any experience doing flips. So it's a lot of times a good thing to partner with other people so you can get your experience. It may be other investors, other real estate agents, other contractors are very good people that are hands-on. So that way, you build a good relationship with contractors and handyman, so they can, when they're walking through, you can get the numbers and y'all can become business partners in that manner. All right, so those are very good relationships to build. All right, let me answer some of these questions real quick. Is wholesaling hard? I'm trying to start my own business and wholesaling houses or keeping it and rent it out. I can talk about that too. Or Section 8, but I don't know nothing about real estate and I just started following. You and I make myself binge watch at least 4 videos before I go to sleep. I'm learning about business credit though. Keep blessing people. Okay. This is what I say about wholesaling. I appreciate you for tuning in to the channel. So this is what I feel about wholesaling or any aspect of business, but specifically real estate. It's about being consistent, being solution oriented, and building a system that you can build up a pipeline so you can always have people coming through. So if you're somebody who and sometimes it's challenging to find that groove and that niche. All right. So if you're driving for dollars, all right, you need to be like on the hunt, drive through different ways, different areas, different subdivisions, and try to get 100 properties a week, 100 properties every 2 weeks, 100 properties every month. Just make yourself a goal and keep a consistent flow of people to call and people to follow up with, and keep building relationships and learning about things in real estate, and get you a mentor that can help as well in a specific area, because that could just edge you out a little bit to get you some more experience. And I will say now, when you're new and you can be listening to a lot of people online or whatever, even myself, it can be challenging. But most of the time, you just have to get out there and you have to do it, and you have to do it consistently. And things come up in the process. The main thing I figured about wholesaling is the concept is simple, right? Find somebody who has a problem and bring them a solution. Now that seems simple, but at the whole time, you have to make sure that the seller of the house, they're in good standing, because they're going through a lot internally and their minds can change on any given moment. Something can come up. When you have a buyer on the other end, you want to make sure that their finances are straight, make sure that they're doing what they're supposed to do. The title company, you got to make sure that the title company is on top of their job, making sure they're what they're supposed to do. So when you get into that aspect of real estate, you almost like the glue of the deal. At least that was me. You got to call and make sure everybody is doing their job. And it's worth it. It's very worth it, because real estate is one of the biggest part of the generational wealth. But I do get how some people may just have money. They may not have time to put their feet on the pavement. So when you're dealing with these buyers and people, and when you have lines of credit and business credit and you have funding, all right, you rather probably just find a good deal. All right. So if you can make 50, 60,000 on the flip, and you give somebody 5 or 10,000 for finding you that property, all right, people will do that all day, long as those numbers add up. But I wouldn't say that it was, I wouldn't say it can be very challenging if you don't have the right systems built, and you can get burnt out. So find a mentor is a great thing to do, and just building out, having daily goals. If anyone in Georgia is trying to wholesale, let me know. I do pay cash and close fast. I do have my own cash. So there you go right there. So Mr. Deuce, say he looking for properties. He got his own money. He closed fast. So there you go. No, it's not hard. All you just have to do is build a system around it. Very true. I never use private lenders, but my cards do work. See right here, Mr. Deuce knows. All right. So business credit. All right. Personal credit. You know what I mean? Navigating those systems. So it's very important that you fix your personal credit so you can walk into the bank and the bank gives you money, right? And that's why it's important to get lines of credit and credit cards. And a lot of these business credit cards, depending on which ones you get, may have 0% interest from 6 to 12 months. So you may be able to max out. I'm not telling you to do this. I'm not no financial advisor. But if you got a business credit card with a $50,000 limit, all right, you'll be able to max out the $50,000 as long as you're able to make those payments with no interest, and you can flip that house or that property before it's time to pay that card off. So to make sure you have everything in good standing. So that's a couple of ways: private money, hard money. You can do it with no money, but you're gonna really have to grind to get it. And if you're talking about something on a lightweight scale, you know, if you're somebody who's new and getting a house, looking into the, you know, whether it's FHA loans with 3.5% down, or whether it's like the USDA outside of the, you know, you're outside of the of the city, you know, on kind of on the outskirts of the city, they got loans for that. And then typically, like when you're talking about 1 to 4 units, that's still single family residential. So something that you could look into, depending on your area and stuff like that, is if you get a duplex, a triplex, or a fourplex, you can get that, but you can get a FHA or USDA loan, all right, and that's still considered a single family residential. Now that you have that particular home, all right, you can be renting the other doors out, and those people can be paying for your mortgage. You know, pretty much you charging them rent, but they can be paying for your mortgage. So that's another way to get into the real estate and create some passive income, as well as help people, you know, have people pretty much paying for your mortgage for you. Okay. And then after a couple of years, you can move out and you can just rent all the doors out if you choose to do so. It just makes sure you find, you know, make sure you find, I can't even think of a mortgage loan officer that'll do that, because some of these bigger banks, they won't allow you to get a single family, you know, with FHA or USDA, but it is possible if you just dealing with the right loan officer who you know who they guidelines fit that criteria. All right. So as far as getting set up, you know, with getting lines of credit and stuff like that, the main things that I talk about on this channel is, you know, one, you know, I say in these times right now, having good personal credit, utilizing that personal credit, maybe the personal guarantee, the business if you choose to do so. If you do not want to do that, I get it. People don't want to have them two things intertwined. Getting a business situated consists of filing for a business entity, just for the purposes of this entertainment purposes of this video. We'll say you have an LLC. That LLC then has a EIN that you can get from the IRS.gov, and then you can go get a business bank account. Now inside of that, that's pretty much starting the basis of your business history, business credit profile as well. Now, when you have all that stuff, you're still going to need a business email, a business fax, a business phone number, a business website, to list yourself on the 411, Google, Bing, and even have some type of social media presence. Now, after you have all these things in place, all right, you really want to build a business credit profile, and most importantly, you really want to be making some money. I know that's very challenging for some people to do, but that's where, you know, having collateral and different things such as personal credit comes into place to leverage. Now, if you're somebody who just already have a system and you're ready to make some money, well, the banks and the fintechs such as like Oxygen, Divvy, even when you're dealing with Square, PayPal, Cabbage, there's some different ones. The fintechs have really been the ones that are dishing out funds nowadays, because everything's going digital. But you still have places like Navy Federal and other credit unions that are lending to businesses as well. So typically, that's starting up that process. A lot of people talk about the vendors like I have as far as building up a business credit profile with Dun & Bradstreet, Equifax, Dun & Bradstreet, and Business Experience. All right, so when you're building with those, you're monitoring what's reporting, and the more that you have reporting in good standing, typically that makes it look better when you go into banks and different things like that. So it does help for you to have 2 or 3 years in business. It does have to have P&L statements and being profitable, $10,000 plus a month. Those things will help. All right. So will finding properties and just building those good relationships as well. So those are some things that you can do. Also, if you do have good personal credit and you find you're dealing with the right people, there's some steps that you can kind of skip over a little bit, because there are people out there who've set up businesses 3, 4, 5, 6, 7 several years ago, and they did it with the intent purpose of just selling the business. So there might be a business out there, but you want to make sure you do your due diligence, get an attorney if you need to, look over the business, look over the financials, and you're able to acquire a business that already has a history. All right, so if that business already has a history, a good history, a good financial history, a good business credit history, all right, and you have good personal credit, say you use, you know, $4,000 to $10,000 or something like that, whatever, to get the business, and the business credit profile is good, and you might add some stuff to it, put some sauce on it, but then the financials look good, your personal credit is good. Now you might be in the dough for, you know, 100,000, 200,000, just depending on how it's set up. So that's another avenue, you know. But like I say, do your own due diligence, fact check, and make sure whoever you're dealing with is credible when it comes to that type of stuff, right? Financials, everything. So, you know, those are some ways to get started, you know. And I just did a lot of networking. Me personally, out in the area at the time, you know, when there was a lot more activity, I did a lot of networking. I went to a lot of meetup events. I actually posted a lot at that time. I posted a lot on Craigslist. I would post properties, you know, whether I had already sold it or assigned it, and just get people's information. And I would pretty much vet buyers. And when you get good at it, you're able to vet people, have conversations with people, and you know who the serious people are, and you know who the other people who are wholesalers or new. There's nothing against other people. You just want people to be honest and know that they have the money. When it comes to funding the deal, it's gonna boil down to find the money, find the deal, or find the deal, find the money. And if you flat broke out here, all right, you know what I'm saying make some money, but if you got time, you know, you could do things. The way to find some properties is driving for dollars is a good way. You can pull people who check the property tax records, for people who've been delinquent 3, 4, 5, 6 years, over $10,000. Maybe you can, you know, barter a deal where they get their taxes paid and you get the house for a decent price. You got people going through probate with, like I said, people passing away and stuff like that. So there's many different reasons. You know, people that default on their mortgage. There's many different reasons people may want to get out their house fast, for you know, just pretty much for a discount, you know. So yeah, if y'all got any more questions, y'all can or insight, y'all can drop them in the comments as well. I just wanted to come on and share a little bit of my insight from the good brother that asked that question to me yesterday, because I said I was gonna come on today and talk about it. If people are not listening to you, that's crazy. You giving away all the game, and to your viewer, trust he's not lying. You just really need both business and personal. Yeah. Most def, man. Most def. And just to dive deeper into it, that's the way this matrix is set up at this particular time. Okay, so you know, we are getting into the cryptocurrency space, and you know, people out here getting NFL contracts paid in Bitcoin, Tesla in about 1.5. So, you know, stay tuned for that. People definitely, you know, gonna be purchasing houses and stuff with that as well, if you are into that space. But meanwhile, yes, I would say the quickest way to get funding is personal credit and business credit. However, when you're dealing with real estate, you can be flat broke and do $1 million deal. But it's about the information, and you're probably going to be dealing with commercial property and stuff like that. So there's people that wholesale real estate, wholesale commercial real estate. You know, that's a prime. I just gave you an example. The taxes is my sauce. Don't give them that one. Yeah, you say that Mr. Deuce gonna have to. Yeah, I'm not talking about no taxes. You might have to go to your channel and talk about that. That's a great question, Darnell. I'm not even quite sure if you have some acres, what's the best route to get funding to build a home. I mean, first thing I would check with the city about the zoning, and so on and so forth. And then there's plenty of places out here, and it depends on what you're looking at. I knew some people personally who were doing something. They were doing some funding and stuff like that. It just depends on your location and what exactly it is that you're trying to do. To be honest, the first thing that came to my mind was like, not, I want to say tiny homes, but like the smaller efficient homes. I think that's something that's been popping up more lately. So depending on where your land is, you definitely you can definitely get some funding for it. Like I say, it just depends on the zone and the purpose and stuff like that. But yeah, that's pretty much that's pretty much what I came to talk about, man. I'm opening it up for y'all got questions in the chat. If y'all wanted me to dive a little bit deeper into something, we can do that. But just to recap, for people that may just be tuning in, I was sharing some insight about some ways to get funding into real estate. You know, how to do your first fix and flip, you know, how to get funding for it. So I pretty much covered this: private money, as knowing people who have money, but they may not be talking about it publicly. Maybe it's a grandfather, maybe it's a friend, maybe it's somebody who have 401k savings. Maybe they made a lot of money from stocks. Maybe they're looking to make money, but they don't want to do the footwork. All right. So when you bump into some of these people that are very successful and you find a good deal, they'll lend you the money. All right. When you get to a point in this game, your money makes money. All right, that's the game that a lot of the wealthy play. Their money makes money. All right, so they make smart financial decisions to the point where they can, you know, lend you money at 10, 12, 15%. All right, and they're fine with doing that because they might be doing it over and over again, and at that point, that money just works for them. So I talked about a deal where I used some private money. I was able to find a property, contract it, come out of it with no money down. I had zero interest for 90 days. And not zero interest, zero payments for 90 days, but it's about 11 to 12% interest. So the interest was accumulating, but I didn't have to pay anything until after that 90 days. So we got that house sold before 90 days. You better believe that. All right. So hard money is very similar, but there are going to be people who, you know, and all these things, private money, these things are negotiable, but some people have their own terms. So hard money lenders may charge you between 8, 9, 10, 12% for the money. And, you know, once again, it's about having those relationships and finding the particular property that the numbers all match up so everybody could make money. So private money and hard money. Then there's, you know, personal credit and business credit, having that foundation. And you can have, you know, lines of credit and credit cards. Sometimes you need the money to get the down payment to get into the loan. All right. Just off the rip. So that's what that can help you do as well. And then, you know, you are able to get properties without any money, but it just takes work and effort, and sometimes it takes people a long time. Some people luck up and get a deal quick. Peace, fam. What you think about getting funding from your factoring company if you have a trucking company? Peace, fam. What you think? I don't know, and I'm not sure I grasp what you're saying. Peace, fam. What you think about getting funding from your truck factoring company if you have a trucking company? Okay. Mr. Deuce, I'll catch you next time. Maybe we can do a joint video. Yeah, most def. And starting soon here, family. Look, I wanna bring some of y'all on and share some of y'all insight as well. You know, do some interviews with some people there so we can share some more light, some more information, and you know, and you know, spread some love to y'all channels, because I'm sure a lot of y'all have some great insight. I've spoken to a lot of you all, and a lot of you all are doing some great things. So definitely, Mr. Deuce, you know what I mean? I think the easiest way, I mean, if you're on Instagram, you can DM me. We can set something up. That's definitely something I want to start doing this year, like real soon. But getting and then smart skills, getting funding for a trucking company, in my opinion, is something that is smooth to do in these times. You know what I mean? When it comes to building a business credit profile, I like the trucking aspect of it, because, you know, when we're talking about vendors and so on and so forth, I like trucking because, one, it's going to bring in some consistent cash flow. Also, a lot of the early cards that you can get are going to be fuel and maintenance cards, which you can put that right to work. You know, so if you're on the road, you paying for fuel, you paying for maintenance. And I've even had com data cards that I used for hotels and stuff too. So depending on you know, what route you go with that, I mean, you can have a very successful business. So, you know, from that standpoint, so building business credit for a trucking company is definitely beneficial. And you know, but I don't have much insight about starting a trucking company, but I do have insight about building business credit, and a lot of the information is very much so applicable. I used to be a truck driver for about 5 years, so trucking is one of the it's gonna bring in some money Once again, it's gonna bring you some consistent money. It's gonna look good on the P&L statements if everything flowing, and plus the cards you get will go straight to fuel and maintenance. So that will boost your business credit score, allow you to make money without using your money at first, and it's just a powerful tool, But I did word on the street. Hood Estates got a nice course out on starting a trucking business. Not building the business credit profile to my understanding, but I don't know if they cover that or not. But they do cover getting started in a trucking business and making passive income by putting somebody else in their driver's seat. So that's something you can go check out for sure. Yep, family. But that's going to be it, man. I say this once again. Look, getting the financing, whether you're doing the traditional way, trying to go to the bank, when you're dealing with beat up properties, it's not as easy to do. And building relationships. All right. Build relationships. Okay. Go some of these Facebook groups and so on and so forth. Check some people out, just do whatever you got to do to build a relationship, get in the room with some of these people. You never know, and when you start putting yourself out there as somebody who buys houses, claim that, own that, and people will come your way eventually. If somebody asks you what you doing, say, hey man, I'm looking for a house to buy, man. How you doing? Make that your opening statement every conversation. When you walking around, put you some advertisement up. You know what I'm saying? You just because people got to know what you do. All right. So the private money people may not be talking, but the more that you engage and talk about what you're doing, they may pop up for you. With that being said, family, I think I'm gonna go ahead and get off this thing. Look, if you're looking for how to get funding with your business, set up your business to make it credible, there's a link in the description. Step by step how to build your business credit profile. There's tips in there on how to clean up your personal credit as well. All right, you can check the link in the description for that. You can check out nav.com if you have a business and you don't know where you stand with your business credit profile. You can go check them out. All right, it's free and they got a lot of great business credit information as well. They do have paid version, but you can just start with the free version. All right, and look, whatever y'all want me to talk about, y'all let me know down in the comments, and I'll do my best to touch on it, or do something, put something together for y'all, whether it's a live like this, or a course or whatever. We'll work on that. All right. But anyways, family, y'all too smart to be broke. I'll see y'all next time. Peace.
I'm too smart to be broke. I'm too smart to be broke. I'm too smart to be broke. Where's the money? I'm too smart to be broke. I'm too smart to be broke. I'm too smart to be broke. Where's the money? I'm too smart to be broke. I'm too smart to be broke. I'm too smart to be broke. Where's the money? I'm too smart to be broke. I'm too smart to be broke. I'm too smart to be broke. Where's the money?